All right, the stock market has just opened. We're 3 minutes into the open after the release of that August jobs report showing the economy holding relatively steady amidst the president's trade war. So take a look at the numbers here. We're essentially flat for the open. You would expect that the market will continue to trend slightly higher because of this new report that is out. Unemployment basically essentially staying the same. So for more on this, let's bring in Scott Gamm. He's a reporter for Yahoo Finance, and he's joining us now to talk about all this. So Scott, put this in perspective for us. Today's jobs report in terms of the stock market and the health of the overall U.S. economy.
Well, I think on both fronts, this jobs report showed that things are doing just fine right now, and it kind of helped to calm some of the recession fears that have really heated up over the past month or so, especially with the trade tensions between the U.S. and China. And it also confirms the one area of the economy that is undoubtedly strong right now, which is the consumer. So if people are continuing to get jobs, that is good for consumer spending, which we know makes up the bulk of GDP. We have been seeing some weakening data in the manufacturing sector, but remember, that's only about 12% of GDP. So that sector may not be powerful enough to tilt the entire economy into a recession.
So the unemployment rate remained unchanged. What does that mean? How do I interpret that?
Well, look, the unemployment rate at about 3.7% is at its lowest level in some 60 years. So it shows that, people are still working out there. We saw average hourly earnings rise 3.2% year over year. That was a little bit more than what Wall Street was expecting. So that shows that employers are finally starting to pay workers a little bit more money. Wage growth had been stuck in the twos for quite some time, rising 2% year over year, and now we're at 3%. So it's still rather weak wage growth, but it's certainly inching higher. We know that employers out there have actually been able to make do with fewer employees. Of course, after cutting a lot of jobs after the financial crisis, they've kind of learned how to get by with fewer people.
So we've been talking recently, Scott, about recession fears. What is the outlook that you're hearing most economists have over the next 12 to 18 months?
Well, it's very hard to predict. I think the worry right now is that the trade war between the U.S. and China, the uncertainty there, has caused businesses to invest less money and kind of sit on the sidelines and wait this out. And so that lack of fuel for the economy could certainly ding economic growth. But like I mentioned earlier, we are still seeing the consumer spend money. We've saw a lot of retailers report strong earnings over the past couple of months. And I think economists right now will be looking to see if that momentum continues. So we'll want to see more jobs reports like this. And one thing I do want to point out about the August numbers is that they sometimes seasonally can be a little bit weak just because companies are closed during August, right? People take vacations, executives take vacations. So the response rate to the government surveys isn't as robust. And so that's one reason why you might see some weakness in the numbers. But that's not necessarily because there's something wrong with the job market. It's just a seasonal factor. So I'd be very curious to see the revisions to this report, which we'll get in 1 month and then in 2 months from now.
So do you think we'll see a September surprise, Scott? I mean, as you know, historically, September is a rough month for the market. We started out fairly, hasn't been particularly strong. There are some analysts, though, that say that this could actually be a pretty good month.
Well, I think lately the market has been very headline driven, largely when it comes to trade. I mean, just yesterday we got a headline that the U.S. and China were set to resume trade talks in October, and that contributed to a 400+ point day in the Dow Jones Industrial Average. And actually, where we are right now, we're back near record highs in the stock market. We're only about 1% away from those levels. And even during the month of August, yes, it seemed as though the market was very volatile, but stocks only fell 2% during that month. It wasn't even a full-blown correction, which is typically defined as a 10% drop. And I think the market next will be watching for commentary from Fed Chair Jerome Powell later today to see kind of what he's thinking heading into that September Fed meeting, which starts in about 2 weeks. And today will be the last time we hear from Powell before that meeting. And the market more broadly is expecting another cut to interest rates later this month.
All right, Scott Gamm, thank you very much.